Hey everybody, Boris speaking at Forex. Welcome to Weekly Technicals for the majors for Euro dollar, dollar yen, and pound dollar, July 8th to July 12th, 2019. And the big question now, post the non-farm payrolls, is now what? I mean, the critical drive this whole week has been the assumption that the Fed is going to cut rates significantly. In fact, the market had priced in almost a significant chance of a 50 basis point cut. But we had a very strong non-farm payrolls, came in well above expectation at 224. Overall, basically suggesting that the U.S. economy is far from cratering into a full recession at this point. It's certainly lots of signs of a slowdown, especially in the PMIs and the ISM data, and globally there's a tremendous amount of slowdown, but none of it translating yet into a clean, clear action for the Fed to truly cut rates hard. And as I've been arguing for a very long time, the Fed itself is loath to cut rates right now because the economy is still in an expansionary mode and it has a very limited amount of rate cuts to work with. So they much rather be able to save those cuts for a time when they feel they truly can be much more effective. So the conventional wisdom, and I think this is a reasonable assumption, is that the Fed is going to throw the market a bone and cut 25 basis points just simply because there's so much expectation now for a 25 BP cut, but very much suggests that it's going to be a one and done for the time being. Now that in turn could create a little bit of a flow in short covering, especially in the 10-year yield, and could push us higher. But so far, the recovery today on Friday has been not as impressive as you would like it to be. Dollar yen could not really clear the key 108.50 level, and as I'll show you on the charts, for a true breakout of the dollar to the upside, you need to see 109 in dollar yen. On the other hand, we did see lots of weakness across the board, but weakness in the anti-dollar pairs to their natural support levels. And that's really going to be, I think, the key thing. We'll see just how strong this dollar rally is next week because, honestly, there's really nothing on the calendar to drive us. So it's going to have to be natural flows of the market and decision of the market as to whether the dollar truly gets a bounce here or the rate picture still continues to create a downward trajectory in all the dollar movements. The resistance support levels have certainly moved in favor of the dollar at the end of this week. Euro dollar especially suffered a pretty significant decline. We're now 113 resistance, support is 111.50, but still, we're still preserving, as I'll show you on the charts, that long-term uptrend recovery. And that's really going to be the key thing. I think a true dollar rally is going to destroy the euro to the downside, and unless we see that happen, it's still anybody's game. Same story with dollar yen. Really need to see 109 to the upside, and cable, weak as it is, appears to have made at least in the near term a 125 double bottom. So the calendar is very much a nothing burger next week as far as the majors go. We have industrial production, current account balance. All this is going to be bearish on the eurozone next week. UK GDP and trade balance data should be bearish given the very negative PMI data coming out of it, but so much of it has already been factored in that it's really a question of, just how bad the numbers are. And frankly, it's one of those kind of things where if the number is already factored in to be so negative, any even mildly positive surprise could actually push the cable back up. And then into the end of the week, the only thing that we have really going is the US CPI, PPI numbers, which could be lower. We're certainly projecting a little bit of a bearish dollar. And that, in turn, is what weighs on any kind of a legitimately strong dollar rally breakout. And that's really going to be the key. Does the dollar get to break out next week? My doubts still remain. Because when you look at the charts here, the euro certainly suffered a pretty serious decline 2 days in a row. Very, very ugly, essentially 114, complete reversal of this move. But not quite the rejection of the uptrend hypothesis that we've seen over the last couple of months, because we're still holding, as far as the closing of the day today, higher lows. And that's really going to be the key tell here. This particular level, this 111.80, 111.50, going to be a big battleground next week. If we have a couple of days where the euro holds bid, starts to make its way back up towards the 113 level, that really could suggest that the uptrend remains in place and we could make another run back up towards the 114 level. Remember, we had the big decline in the euro a couple of weeks ago, and it also stalled here at around the 112 level, really at 118, well above the prior lows, and that gave us impetus for a move higher. There's really very little fundamental catalyst here. We're also going into the doldrums of summer where everybody's going to go on vacation. So it's going to be hard to see what drives what. But of course, geopolitics is always the unexpected twist here. We don't know what happens with Iran. We don't know what happens with Trump on the next move. We don't know what happens with European sanctions. So all of this becomes kind of a roulette wheel here for us to trade off of. All we can do is keep an eye on the levels, and I think trade off those levels as our anchor points going forward. So cable, as far as levels goes, also shows kind of a modicum of a bounce here. This is, you basically essentially assume this is a double bottom and trade against that. So the low here was what, around 24.80? I would say 24.50. If we take out 24.50, then certainly you're looking for further decline in cable. Cable is the weakest link in the armor here. There's very little positive data here. The only positive in cable here is that almost all the bad data is baked in, and if you have some hope of a no exit, of some kind of a negotiated type of a Brexit situation or stability in the UK political system, that could provide a little bit of a lift. One interesting side story this week that kind of got swept under the rug, you should keep an eye on politically. There was a lot of pressure now on Jeremy Corbyn to make the Labour Party the Remain Party. And remember that Corbyn is actually, ironically enough, was the Brexit guy in Labour, and Theresa May was actually the Remain person in Tory, and they wound up working against their own personal desires politically. But now at this point, I think there's some tremendous pressure on Corbyn to make a Remain argument for Labour and offer a clear choice. And then furthermore, there's lots of political machinations going on in the UK Parliament to make sure that Boris Johnson does not have the power to override Parliament on the Brexit issue. So all of these things are all minorly positive cable, and certainly if the market again begins to feel like a hard Brexit is not really a viable reality, we do get to see the trade back up. Because I think what certainly the situation in UK is showing is that as the closer we get to a real hard Brexit, the worse the situation in UK economically becomes. And I think the political sentiment here probably is going to start swinging towards some sort of a negotiated deal at very, very least. So you assume that 25 is the bottom for now. You trade against that. If it gets broken, then it gets broken. But at this point, the risk-reward ratio is very, very decent. And especially if we can get maybe a Monday green candle, that certainly gives us scope here for a trade back up to 26, 27 on that trade. And then finally, when you're looking at the yen makes another run back up to the 108.50s, but it's this cement ceiling. I mean, this is just a monstrously difficult area to break. We're talking about from the 31st of May now to the 4th of July, literally Memorial Day in the U.S. to July 4th in the U.S., two of the primary, it's the anchor holidays, and we haven't been able to break this 108.50 level. That's massive. If we do break it, it's even more massive, and that's really going to be the look. I think the look this week, there's a story this week, if you're going to trade this from a technical level, is if we take out the 109s, that's a big, big, strong tell that we have a reasonable chance to go to 110s. Unless we get that, it's kind of steady as she goes as we watch the paint dry in the FX market. Wish you guys the best luck, the best trading. Boris Landsberg, over and out.